Hello again, this is Howard Reitzel from Invest Financial Corporation with the February 2013 update. Please make sure to review the attached disclosures when you finish watching this video. Despite major headwinds from Washington and rumblings from Europe, markets managed to hold onto the rally during most of February. Markets stumbled a little bit in the third week, but quickly recovered and managed to end the month on a positive note. For the month, the S&P gained 1.34%, the Dow gained 1.64%, and the Nasdaq gained 0.88%. The major headline of the month was sequestration. In this context, it referred to the automatic series of federal spending cuts that began on March 1st. This sequestration deadline was extended in January during the fiscal cliff debates, but lawmakers weren't able to negotiate an agreement before the March 1st deadline. In case you haven't been keeping up with the news, these spending cuts would trim $85 billion from the federal budget. This might not sound so bad, but the problem is that agencies can't pick and choose where to cut. Ultimately, many programs, including defense, Medicare, and other critical areas, all have cuts coming. While the mandatory cuts have been ordered, they haven't filtered down yet, offering some breathing room before we again see the full effects later this month. Here's to hoping the politicians will get it together before then. If you'd like more information on this topic, you may want to check out the notice we posted on our website last week. The troubles in Europe drove selling pressure in February as investors grew concerned about continued weakness in the Eurozone economy. After 2 quarters of negative growth, Europe is now technically in a recession, though this is certainly no surprise to anyone who has been following the issue. In the final week of February, Italy's national election results were released and showed a deadlock. This is a problem since a strong leader will be necessary to push through the economic reform and deal with Italy's many economic problems, which also affect the rest of Europe. While there is reason to be concerned about the EU as a whole, it is a major trading partner with the United States. Italy's economic problems alone aren't enough to make a real dent in our progress here at home. In other words, don't let news out of Italy cause you to alter your entire investment strategy. On the positive side, we saw the release of some optimistic economic data this month, which overall shows that the United States economy is still chugging along. Here are some highlights. Consumer confidence is up, despite the new 2% payroll tax that hit in February, meaning that consumers are already adjusting to smaller paychecks. Consumer spending also increased in January, which is especially good news since it is the main engine of the United States economy. The housing sector is still booming, with sales of new homes increasing to the highest level since July of 2008. Looking ahead, we expect sequestration to dominate the headlines as government agencies begin hacking away at their budgets and lawmakers continue debating. We're pleased that markets seem to be shrugging off the news so far, but we won't be surprised to see some turbulence ahead. There's another deadline to meet note of this month. On March the 27th, the current round of federal funding is due to expire. This means that lawmakers need to resolve the sequestration issue and pass a new round of funding before the federal government has to shut down. It's too early to make a definite prediction about what will happen, but we're keeping a close eye on what's going on in Washington, and we will keep you updated. Once again, this is Howard Reitzel with Invest Financial Corporation, signing off for the month of February 2013. If you have any questions about what you heard in this update or would like to discuss your personal financial situation, please give us a call at 800-692-3274, extension 7571. We'd be happy to talk to you.